Have you ever focused on anticipating in your trading? I mean, really thought in your mind about what it means to anticipate your next trade and how to do it. I think anticipating your trades is a mindset that will help take you to the next level, but it takes time to develop that skill. In this video, I hope to stimulate your trading mind to the point where you begin to anticipate more of your trades. Does this sound familiar? You are square in your position. You see the price action moving higher. You react by buying because there is momentum in the upward direction. Or you are square and you see the price action move higher. You react by selling because you want to sell high and buy low. In each case, you are reacting to the price action. One time you may go with the price momentum. Other times you may go against the momentum. It's kind of random, isn't it? It's a reaction. Beginning traders also tend to react to news headlines. They react to strangers' posts on a Twitter stream. They get really reactionary when someone says something really off the wall, like the euro versus US dollar will be down at 103 in November, or Bitcoin will be back at 20,000 by the end of the year. Random reactions. As Forex traders, we need to react. If we don't react by pressing the buy or sell button, we are paralyzed and good trades pass us by. However, to be more successful in your trading, you need to add anticipation to your trading and then react. What do I mean? Well, before I delve into you, the trader, let me first parallel other professionals and demonstrate the importance of this life-enhancing mindset. Take an animator. A friend of mine, she's also a trader, is an animator in Los Angeles for a major studio. When you animate a cartoon scene, you are thought to be at the top of your game when you express anticipation in your work. In a way, the animator is anticipating what the viewer needs to see. Take this example of the animation of a bouncing ball. This is the parallel to a reactionary trader. The ball is at rest. Then there is a series of reactions off the surface. There is no anticipation of what may happen. The ball just rises and falls, rises and falls, rises and falls. Compare that to this animation where the animator adds an anticipation element to the animation. This is the parallel to the trader who anticipates. The anticipation comes in the form of a compression and then a reaction. Anticipate, react. Anticipate, react. Anticipate, react. Think of it as seeing the future. If you just saw the compression, you would anticipate the bounce. Another example comes from my favorite Sports Illustrated investigative article titled, "It's All About Anticipation." In that article, David Epstein writes, Ryan Howard, a now retired baseball player, and Rafael Nadal, still going strong in tennis, don't have quicker reflexes than you or I do. They hit the fastest pitches and return the hardest serves because they can see the future. He goes on to say, fast reaction time helps, but what really makes a good hitter or a good tennis player is his ability to process the nuances of the pitcher/server's throwing or serving motion. I won't go through the nuances of the story here. You can click on the link below and read it for yourself. But the scientific point from the article is that the best athletes anticipate and then they react. Because they anticipate, they can see the future. Do you feel that you can anticipate and see the future in your trading? Do you know how to anticipate in your trading? Well, fundamentally, you can anticipate the relative strength or weakness of one currency versus another. Currency pairs tend to strengthen or weaken when central banks are at odds with each other. The Fed has been tightening, the ECB has not in 2018, and the euro versus US dollar has weakened as a result, with the euro going down, the dollar going higher. The problem is the Fed was tightening in 2017 and the ECB was not, and the euro dollar trended higher. Why the ambiguity? There are other stories in play. For instance, Trump wants a weaker dollar. And those stories can take precedence over other stories. When anticipating fundamentally, you need to sometimes anticipate the story changing, get it wrong or be out of sync, and it can be really tough. It's hard to do. Thankfully at Forex Live, you can get some great fundamental insight which can allow you to anticipate and react to the fundamental trends. Technically, you can also anticipate, and personally, I find it much easier to do. I sometimes am criticized for being boring, using the same tools all the time, or people may say he's balanced in his analysis or non-committal at times. I get it. I can anticipate that criticism because it tends to come from traders who don't think about anticipation technically and what that really means. 99% of the time when I talk technicals, I am boring and maybe even non-committal. But let me put it this way. Hitting a 95 mile per hour fastball or returning a 130 mile per hour serve is boring too. The very best athletes don't alter their anticipation and reaction, but are consistent in what they do and how they do it. Anticipation is about being boring and repetitive. Don't forget that first lesson. The second lesson in anticipation is this. In trading, after the anticipation level is reached and there is a reaction, you look for the next anticipation level, the next pitch, the nuances of the market's price action. Let me show you what I mean. This is the dollar-yen on an hourly chart. As the market price is rising here, I can draw a trend line that connects the high prices. In the Asian session here, the price tested and moved above the trend line and failed. Now, I could have anticipated higher prices on the break here, in which case I would have swung and missed. Strike one and a small loss. Now, in the New York-London session here, there is another opportunity to anticipate against that old trend line. In this case, the price is moving higher and retests not only the trend line, but also these highs in the 111 to 75 to 82 area. So there are a few reasons to anticipate selling. What is important as well is others around the world can anticipate the same trade because they can see the same thing on this exact same chart. Risk is also defined and limited to the move above the high. You're not risking a lot on the trade. Now I may post, this is a key area. Stay below, more bearish, move above, and stops will likely be triggered. I anticipate sellers right here and a reaction, but I understand my risk if it goes higher. In baseball jargon, I am anticipating the pitcher's throwing a fastball. If it is misread, and it can happen, I swing and I miss. I can see the future as the price approaches that area. Now, what next? Well, there are two things. One, if you did sell here and were not stopped out, you now have great trade location. You are not going to lose a lot, even if it ends up striking out because the price goes higher and cracks through the highs. The second thing is you stand to make more than your risk from targets being met, like the 100 and 200 hour moving average down here. If you manage the stop down or even keep it at the high because you have great trade location, you can anticipate even lower levels. Break the 100 and 200 moving average, anticipate the trend line here. Break the trend line, and you can anticipate the 38.2% retracement and the 50% retracement. Break those levels, and the anticipation starts to eye these levels. The 100-day moving average is always a big anticipated level. Note back here that the moving average was tested right here before starting the trend higher. I would anticipate that the 100-day moving average would be a tough nut to crack. In other words, anticipate a bounce. Now, what if you anticipated support right here? It's a longer trend line connecting these lines. Traders can anticipate and react by buying right here. Risk is defined and risk is limited. If you were to do that trade, what do you need to anticipate next? Now, you need to anticipate getting back above the 100 and 200 hour moving average. If the price cannot get above those converged levels right here, that is a problem for your bullish trade. So there is a battle between the trend buyers right here and the moving average sellers right here. Anticipate that battle between the buyers and the sellers. There will be a winner. Anticipate and react if you lose, get out here, and maybe even go short. If you don't think of trading as anticipating reacting, start. If you don't have defined levels where you can anticipate and react, start to look for those boring levels. If you do, you will be on your way to understanding more clearly the nuances of the market's price actions. It's all about anticipation. If you thought this video was a home run or a winning return, give it a thumbs up. If it is a strikeout or a service ace, give it a thumbs down. Just hit one or the other. Your feedback is important to us. You can also comment below this video and subscribe to the Forex Live YouTube channel. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.